4th of October, 2023. It's a Wednesday, of course. Rishi Sunak, just listen then, John, have you heard that? Rishi Sunak's wife, his wife was introducing him at the Conservative Party conference, where he's finally going to say and reveal the biggest non-secret of all, is scrapping HS2 from Birmingham to Manchester. And in fact, the conference is being held in Manchester in an old train station. So well done, Conservatives. Well done there.
Yeah, apparently people were having to leave last night because there weren't any trains this morning.
That's
the irony. The irony.
Thing is, I don't know about HS2, but the whole thing about leaving it to the end, I'm not telling you what's going to happen. Wait until you see my speech. But I don't know whether it's viable or not anymore. I know it's been highly criticised, but, pulling out. And like I said before, apparently in China, there's university degrees, the courses that study, public infrastructure failures in the UK. But do we need one line that goes up and it splits from one place to another or not?
I don't know. I mean, I must admit, I do get a little bit bored with all the Britain bashing.
Yeah.
And it does, it's become a popular sport and it's been going on for decades. It's been going on since CP Snow at the end of the in the 1950s, and it's boring. As we know, China has built lots of houses that no one lives in. So
exactly, they've always
they maybe had to build a train line from here to nowhere. I really don't. I just think we should.
Well, hang on, you don't know where. If you are from the north and John is describing you,
I'm not talking about that. I'm talking about China. I'm talking about China building trains to nowhere. I think we should stop the Britain bashing.
Yeah.
Bash the Conservative Party, bash the government by all means, but it's just not true. This is a country full of very capable people doing very good things.
Absolutely. Do you know what? I totally agree with that. And the fact is, do we want a train that get you to London a little bit faster, or do you want to connect the north with regional hubs? I think that's what they're going to announce.
Well, that is what he's going to announce.
In regional hubs, so people can get around the north easier rather than going from north to south. Anyway, let's get on with it. Talking about politics, all that rubbish. Talking about stocks and shares. That's more important.
Yes.
Talking about great British institutions, right? And some people thought I was joking yesterday. I wasn't. But something that's amazing. We've got some comments from yesterday. By all means, hit that subscribe button. Like the video here, if you could share it so more people join in. But some comments here from yesterday. Phil says, Justin, let John speak. Bloody hard to understand what he's saying. Greg's entering Europe. He said, you can't be serious. I think France and Italy will be okay. Haha. I can't get my head around how customers eat their slop from Greg's. It's the lowest quality crap. Oh, wait, it's the UK. No one has any taste. Hang on a sec. Let me just say one thing. Talk about best of British. Greg's is one of the finest purveyors of convenience food in this world. Not only is their food good, their business is good, and their marketing is genius. If you look at the social media marketing, they're brilliant, honestly. Absolutely brilliant.
Yeah, and they make some wonderful clothing ranges that you can buy from Primark as well.
It's a cracking business. It's a good business. It really is.
Who wouldn't want a Greg's tracksuit? I actually do think that, just quickly on Greg's, there is room for expansion. I think overseas is probably stretching it a little bit. You might want to put it in an airport in Magaluf or something. That
are you
that might do you a few
fine food.
But actually, when they started to open up in London, in the city, when I worked there, you got queues outside of Greg's.
Yeah,
and it's partly because a lot of people who work in London, aren't not everyone who works in London has silly money, and it is affordable, and so you get all these sandwich shops that open up in London that charge a fortune, and Greg's actually is a very affordable option. So actually, the expansion opportunity in London in particular, I think was quite interesting.
They are honestly geniuses at mass marketing, high throughput food that's cheap and good quality, but churn it out. And
it's a reasonable quality.
It's excellent quality. It's the best Britain has to offer. And Craig says, trying to hit Europe with Greg's is madness. It's a bit like Domino's fancying a Naples store. But I do like the idea of beef bourguignon bake. Yes, honestly, they'll do it. By the way, look at that chart there. There we are. We are big sell-off here. We are now below 700 on the AIM all share, down 45% since a couple of years ago. And I did say, where there's big sell-offs, there's opportunities, and I don't mean just jumping in to I don't understand why people are jumping in. Do you remember what I said most followed the other day? And in fact, it is again today, was Horizonte Minerals. and it's down 60% yesterday, down 6% the day before on the shortfall in funding, and people are following again.
There's a lot of chatter. There's a lot of chatter on Twitter, X, whatever you want to call it, going on around Horizonte.
Yeah, but
I think it's become a trading play. So I think a lot of people
exactly that's it.
Quick fuck off it, or maybe a quick loss. But I think people, from what I've read on Twitter, are going into this with their eyes open.
Can I just say one? It may be, but say one thing. When you see someone punting something that's not going in the right direction, something is going wrong with the business, be careful. That person has an agenda. They probably take the position and they're trying to get 10, 20% trade off it. Be careful of that. Okay.
Yeah, but people have been openly saying that. I'm going to go into X and I'm going to hope, there's a bounce tomorrow because the sell-off's been overdone. People have treating it as an option to try and make a quick 30%, as some of them will have done this morning.
Hang on a sec. I don't.
It's not the way I invest, but that's it's not unusual.
I know. Someone says, Ewan says there, has there been any further news on XP Power down another 8% a day? I'm telling you now, okay, if you're an investor, stay away from these falling knife trades. They're not worth it. How about this for a tip? Here's a tip for you, okay? Invest in a company that's improving. How about that? There we are. Start with that, okay? A company that's improving, the business, finances, everything's improving, and the outlook's improving. And I'm not talking about the extreme spikes or extreme drops. Avoid the extremes. Don't go for the spikes. Don't go for the drops. Just look for a company start a nice uptrend whose operations are improving and fundamentals are improving. Yeah. And that's a good place to start, rather than trying to nick 20% of a company that's in trouble with debt funding, or a company's had a profit warning come out because you think they may bounce. Because you know what? Bad news is not a lonely bedfellow. It tends to come in 2s and 3s. And like I said, they do a trading update and it's bad, and then they give the final results or interim results that are bad, and then after that, say the recovery is a bit slow than we thought. So it lasts a lot longer than you think. Turnarounds take a long time. So go for companies that have had a couple of previous good results out, and they continue to see good fortunes on the line. That they will reduce the risk of taking a big hit. It will.
Yeah. I think XP. There's no more news out on XP Power, but if you look at the chart, there's the volumes carrying on. Yeah. There's still fairly high selling pressure there, so that's obviously going to drag it down. You can't imagine there's many buyers after a profit warning like that. You'd also assume that they've had some major shareholders on the phone. Who knows what they're up to and how supportive they are, but yeah, it's a nasty situation. This one, as I say, it reminds me of. I've mentioned this before, Avon, which had a similarly, nasty sort of negative turnaround. Caught investors by surprise one day, and it's never really recovered since.
Yeah, I know, but I can't understand the appetite for people to just jump in on a falling knife. It's called a falling knife trade for a reason. You tend to get cut, and more often than not. And I don't care. You will see. You will see these traders go quiet when they get hurt or lose money, but when they make a little bit of profit, they'll shout about it. So it seems like they're genius at it, but no, do you know what? It's not the way. It's really hard, and very few bounce very quickly, and that's really oversold. They have no real problem, but most of the time they're big problems. You
might find that they're just getting followed on Vox, because Vox is a very good place to follow companies and keep up to date with news. Maybe people have been caught out by news. Maybe they've missed the RNS in the morning. If you go to Vox, plug away. It's you sign up to that app, you get notified straight away. So
yeah, but
if there is a big sell-off, sell-off sort of continue throughout the day. You follow it on Vox, you get notified early. So that people might not be selling with the intention of following with the intention of buying. They might be following because they think, oh shit, I'm a holder and I need to keep more up to date.
Yeah, but I just think the way forward, I understand that there's different kind of techniques for trading. I'm talking about investing here. Surely investing is what I try and put some. I've tried trading in the past. I'm not good at it really, and I can't be bothered to jump in and out because I want to be able to take a significant amount of a company for my portfolio wise that I have confidence in. That means doing some decent research, knowing they're funded, knowing the end market's good, they have something special. But I think I know the different techniques. But if you're thinking about investing in a business and you are a shareholder in a business, think about what business would you like to own? Looking through your stocks right now and thinking, if I was to own this business, which one of the ones I hold would I really like to own outright and be happy to put all my money in as if it was my business? I think that's the way you should look at businesses, shares, not just trading vehicles, but businesses, Is it improving? Is it in trouble? So that kind of thing. So I just tend to think it's too liquid out there at the moment. Shares are sometimes too liquid. When you buy a house, you don't sell it the next day because you don't like the stairs or something, or whatever. You've got to hold it for a long time because you can't just sell the house straight away. I don't know. Liquidity is, I suppose, it's a market. It makes a market, I suppose. But anyway, it annoys me. I see people sort of ramping rubbish businesses and stocks are in trouble, I think. Not rubbish business, but stocks are in trouble, and I'm thinking, go for an uptrend rather than a downtrend. You may help you a lot. And that's why I look at a lot on the charts and moving averages, because it helps a lot, I think. Just to, anyway, in fact, one of those today, John, someone did say, Jacob, Spirent Communications got spanked. Management seemed to have mishandled the messaging, or things have deteriorated quickly. So let's have a look at Spirent. Right?
Yeah,
it is one of the fallers today. It's a big company, isn't it?
Telecoms TSCO, and I've looked at this many times over the years. Yeah, do you know what? I mean, this company has been around for as long as I can remember. I haven't looked at it for a while.
This is
mainly on the basis that it's just, this is it's going to sound very harsh, but you find boring companies, big companies boring. I find companies like this quite boring, because what it's actually done or not done is grow for years and years and years and years. So if you look at the final, top line, I go back to 2008. It's had a couple of years where it's grown, but it's been flat the whole time. Pre-tax post profits flat the whole time. And so after a while, and with some dips in between. Yeah. Then after a while, you give up. Just stop watching. Stop watching. That's kind of where I got to with this company.
They say, summary there, the order intake momentum experienced in the second quarter did not continue to the third quarter. Order intake for the first 9 months was 24% down compared to the same period last year. That doesn't sound very good, is it? So again, that's not a company I would want to jump in on. I think if you wanted to buy a business and you think, is this the business I want to buy? I'd say no, it's not.
It's very, and I again, I look back over the many years that I've been looking at this company, or stopped looking eventually, is that it's sort of dependent upon the sort of the mobile technology cycle. So it's testing 3G, and obviously that matures, and 4G is coming in, but there are always these overlap periods where one technology is on the way out, one's coming in, but you get these sort of periods where nothing much is really happening. And so it's just a business, it's sort of cyclical in that sense, even though the whole world of mobile communications is expanding. It's actually proved very technologically cyclical, and really not able to make much headway, and actually what it should be able to make headway. There's all sorts of strange things going on in mobile networks, Internet of Things, and wireless Internet of Things. You would have expected it to have positioned itself a lot better to really grow, and it has.
Well, look at that chart there, right? So you got, this is a dash for cash crash, which it fell off the cliff, of course, and then it hit a high pretty much here in 2020, 21, and it didn't get above that previous high. That's always a sign. So it may need to have a breather and go back up at it, but it didn't. It really came back down, and this second then low was not even high as that high up there, and then all of a sudden it broke 200, and this is there. I'd say probably was a profit warning previously, where it broke the 200 moving average. That was your sign to get out, pretty much. If you'd held on with the bounce, then you've been down here. And in fact, if you look at other companies, Horizonte, for example, just looking at the 200 moving average, right? For example, look at that. It broke it in 21st August 2023. Maybe a telling sign, because it's been above it since December, and then all of a sudden holding on, gap right down massively. What was the other one that fell down recently? Was it what did we just talk about then? XP. Let's look at that chart. Let's look at the chart. See, just here we are. It's in fact, it starts to break up there, which is nice. Breaks down and then breaks up. Oh, gap down. So the fact they didn't break previous highs is not a good sign. But listen, look at that. It's a huge downtrend, and they're bouncing maybe technically. But look for companies on the up that are, it just help a little bit, as long with fundamentals and technicals.
Yeah, I mean, you're talking about the technicals. I'm talking about the fundamentals. And
no, I'm talking about both. I'm talking about both. No, I always say both. Fundamentals first. That's what to buy. Technicals, when to buy, because you can have a good company that's in a turnaround, and you can be so deeply researched in it that the share price hasn't reacted yet, and you can be behind. It can still be a downtrend. So you just look for the right time. It's just efficient allocation of capital. You can wait for ages, invest in a company, and then all of a sudden the share price continues to grind lower. So there's no point doing that. Just wait until the trends, new higher highs, basically. That's all the So
one thing I would say about Spirent and a boring company is that it's sort of plugged away, not growing. It does generate a lot of cash, which it gives back to shareholders.
Yeah.
But then you get these things like today. So does your dividend compensate you for the risk of the lack of capital growth or the potential for capital contraction?
Yeah,
I've never.
I tell you what's worrying at the moment. I mean, looking at those bond yields. I know you've seen the bond yields at the moment, but they're a little bit worrying, and especially America. And of course, there's a catch-22. America, I think 33 trillion now of debt. We got about 2.6 trillion of debt.
I think they were talking about growing $32 billion a day. The American debt.
Look at that. That is that now. That's a 30-year bond. And why that's important is because, of course, they have to pay more interest on their debt. Okay, when a government issues bonds, they're basically borrowing money, and then the higher the interest rate they pay, the more they have to pay back. Now that's a 30-year high. Now when you're paying trillions in interest payments on that, in fact, you know what? It's a bit here I read. Do you know that the UK government spent more on, where was it? I think spent more on interest payments in the last financial year than they did on education. That's the problem you have, you see, is that government starts spending more just to service that debt. And what they have to do then is to issue more bonds to raise more money. But the fact is, they're at higher interest rates, so they have to service that debt. And so it's it's a vicious circle. So this is why I think there will be intervention, because the governments can't even afford this kind of high interest rates.
What's already been intervention? Well, how can they intervene?
They'll basically lower interest rates.
Yeah,
lower interest rates.
But then what happens?
Well, the markets go wild. Yeah,
the markets go wild, but it doesn't stop the fact that you still have to issue debt to pay for things. We're debt-funded economies. The debt will give rise. It might be cheaper to service.
Yeah, it's cheaper to service. Yeah, well, exactly. But then if you expensive to service.
But then you just it creates more inflationary pressures.
No, it won't, because they're not far from creating the economy. We're seeing that now. In fact, everything's contracting. PMI's at day, even though they beat. We are a service economy, about 70-80% service economy. They did beat, but they're still contracting, and so in September, we are going to be seeing. We're in recession.
There will be. Something has to be done.
Yeah.
And in America, you had. Yes, certainly in the UK, but in America you had the Inflation Reduction Act, and you've had various responses in Europe to try and stimulate the economy through investment in specific industries, and in both cases green industries, and we just seem to be rowing back from that and not investing in anything. So
Stop
I think
bashing, John. Stop Britain bashing.
I'm government bashing.
Oh, good. Okay, it's different.
Very different thing. Because there's lots of people, projects waiting to happen here. Just no sort of real focus on financing it. But yeah, there has to be an intervention, but it's not going to be, I think, like the ones we've had in the past of chucking money at the problem.
Look at that. That's the Liz Truss debacle back there. Okay,
she's the star of the conference, isn't she?
Yeah. The government. See people queuing around the block for a signed copy of Theresa May's. I think, what planet are these people on? They're queuing for a signed copy of Theresa May's book. So come on, guys, is life that empty? That's the highlight of your day. Anyway, so Theresa May Liz Truss debacle, and now we're back up there on the 30-year government bond. That's it's risen back up there.
Adults back in the room.
Sorry, before we get onto the front page company news, before we get to company news, I just want to look at some comments here. Old dog, well done, John. No more Britain bashing. Thank you very much. Chinese investment money built the houses. Nowhere else the Chinese money can invest it. I know exactly.
Well, no, there is actually China's Belt and Road Initiative has done exactly the same thing in many other countries. Developing world countries across Africa and Asia. So yeah, no, they have plenty of place to waste their money.
Yeah, Phil, this made me chuckle. He said, sorry, Phil says, Italy and France are used to quality food, Justin, at a better price point. Greggs doesn't. Are you kidding? They've got nothing that compares to Greggs. Nothing. No country has. It's the best. Stop Britain bashing. It's the best of British food. The finest purveyors of convenience food, Greg are. Anyway, YouGov, a quality company with share price on the slide.
Yeah.
Fast growth and being very highly rated. Have you a few? That's Manox too.
YouGov.
Drip feed into a falling SP. No, why would you want to do that? Just do a trend. Every share price goes up, starts going up into uptrend, and does what spikes. So just look for uptrends.
I mean, that's sort of momentum trading. So if you're only investing in things that are going up, you're essentially trying to ride momentum, and that is fair enough. Momentum is a very strong factor. Negative momentum is also a strong factor. So you're right. Yeah. Share prices that are going down are likely to continue down. The thing that always goes wrong with momentum investing as a strategy is you never know when it's going to turn.
I know the trading, right? Listen, all I'm saying is aligning fundamental, looking at the growth, the value of a company, what it's worth, what the potential it's worth, how much cash it's got, the balance sheet, the health, the efficiency, and then looking at the chart. And that aligns it and so fine tunes your thing. So I'm not talking about momentum trading, because momentum trading, the reason why that doesn't work sometimes is because you invest in a company's getting, the share price go up, and people don't pay attention to the value. So they come up with the results that then literally, are as expected or below, and they get hammered because they're way above price or they're way overvalued. So I'm saying just aligning fundamentals with technicals. That's all. That's what I'm saying.
Yeah, I mean, you just going back to YouGov very quickly.
Yeah, sorry, it's good. Yeah.
No, I did look at this. Well, I mean, it must have been a year and a half ago, probably even more. And my conclusion was that it was very, very highly rated, and probably at the time didn't justify the size of the rating. It's a very good business. It does a very, very important thing. Lots of companies use it, governments use it. I think there was always a sort of bad smell around it. Only in the sense that Nadeem Zahawi, the former Exchequer, I don't know how much he owned of it still, but there was a bad smell around some of their political forecasting. So I don't think that helped sentiment towards it. But yeah, I mean, you look at the numbers now, it's still fast growing, and a lot less highly rated than it was before. So yeah, maybe it's time to have another look. What they did do this week was issue quite a large amount of debt to fund an acquisition, but that only supports growth, and I don't remember them making any acquisitions of this size before. Yeah, it's a good company.
Yeah, so they've got their trading update here for the 12 months, and they say full year group revenue is between 257 and 274 million, and adjusted operating profit of 46 to 50 million. So what's the market cap? 700. Divide that by say 50. Divide that by, well, they don't say obviously what 2.5 times sales. No, that's deep really. That thing, that's a bad margin really. Wasn't it? Decent margin of 50. I don't see that overvalued now after the fall off. A big fall off by the looks of it. So yeah.
No, it's not. I don't think it is. I don't think
see where it was. It's half price now.
Yeah, I don't think it's especially overvalued now, and I would concur that it's worth a look. Although take your pick whether you want to drip feed into a falling share price. I don't think it's a problem if there's quality behind it, because you don't know when it's going to turn upwards, or you ignore it until it does turn upwards. But it's a good company for sure.
Yeah, look at that. Yeah, look at that. It's gone back there. We go back to 2014 levels. But again, you see here that the start of the rise happens. All these metrics these moving averages are a lagged effect, a smoothed out version of the price action. So when you hit new highs, these will follow in the end. So when it breaks 200-day moving average and it breaks new highs, that's a good sign. People are paying, and you see if you've gone in there and literally even the golden cross, it dipped here once, back in there, and so you see the share price there nicely above the 200-day moving average. Look at that, from the dash for cash crash, it was above that 200-day moving average from March 2020, and all of a sudden it touched it there. Okay, hang on, what's happening? Trends breaking down. Then you start questioning it. It starts breaking down. It's quite obvious there it's breaking down. All of a sudden, you've got out, say, 1290, and now it's down to 666. The number of the beast.
Yeah, don't buy it. No, that's a lucky sign. Buy it.
I'll have a look at that. No, I wouldn't buy this now until literally you see a bottom forming and then it making new highs, previous highs, and that the trend is up. But now,
good business.
That's a falling knife a little bit.
Very good business. You know, I'm just looking at some of the metrics. You know, gross margins 85%. You know, 84.8 rather, but that's been rising. Operating margin 16.4%. That's been rising. You know, everything is going in the right direction at this company, including the rating, which was pretty much the only reason I turned my nose up at these shares a couple of years ago.
Yeah. I gotta say, best comment of the day so far, Simon. I agree with Justin. There we are.
Yay.
No, aligning fundamentals with technicals. Discipline needs to be hold off until technicals align. I know. I've looked at businesses doing that. I jumped in too early so many times. Until you get this, a series of higher highs. Essentially, what that is, you are measuring the market, demand for the share price. When you get a higher highs, that is net demand. That means even with sellers coming in, there are more people wanting to buy the shares at a higher price. Now, when you get that, that's just market dynamics. It's like when you put a product in the market, for example, and people want to buy it and you haven't got enough supply, you put the prices up.
But there is an opposing school of thought to that, which is that if
they're rubbish. They have no clue that.
Peter Lynch. It's Peter Lynch. Who I wouldn't describe as rubbish, but
no, he's brilliant.
You basically miss the big days where markets go up. And I sit on the sidelines with cash, and I run this risk substantially. But if you sit on the sidelines with cash and miss the big days, you miss out on where the vast majority of returns come from. So technical analysis is in a sense trying to time the market. And timing the market.
No, it's fine-tuning the market. Fine-tuning.
You can call it what you like.
But hang on. We can't argue. Peter Lynch invests in sort of, S&P 500 companies or multi-billion market cap companies who have a long generation history of cash flows and all that stuff. He doesn't talk about nano micro caps and all that stuff. That's a different.
The same sort of principles, though. It's in terms of timing and YouGov. We're talking about YouGov, which is not a nano cap. It's the best part of £1 billion company. So I think you could apply.
Well, just show you the chart. If you just paid attention to the 200 moving average, you've done a lot better than if you just sat in there and said, "Hey, this is going to turn around in the end. It's fine." Why?
Or you could have looked at the fundamentals and gone, "It's hard. It's overvalued."
Exactly. But
it's undervalued.
So what we're doing now? This is what I do now. Okay, right? I like it. I'm going to put it through my spreadsheets and see what it's like and see if it is decent value or whether debt's too much. And then I literally click on that, right? Add an alert on YouGov, and I want the price crossing 50-day moving average. If you want it faster than that, then maybe bring the moving average down. 50 MA, and then I know when it first does that, then I know the downtrend may have stopped.
No, I don't actually disagree that if you combine the two, you've potentially got quite a powerful system.
Let's talk about Neometals, John. What are Neometals about? In fact, let's quickly. This is it's RNS, a vast extension of debt funding to November.
Yeah, sorted.
They're down 2%. I3. They said basically they're aware. They said they're aware now. The license for the TAME discovery has recently lapsed, and they're looking for other options for that.
That's unfortunate.
Ben's Creek. Have you ever been? Have you seen Ben's Creek?
No.
They are a metallurgical coal mine in North America, but it seems like their production is going up there slowly. So
you would have thought so. Well, they need a lot of steel in America. There's a lot of a lot of infrastructure to be built and repaired, and they want, like many countries now, they sort of resource nationally, and they want their steel to come from America. So maybe in a good spot there, but not one for me.
There we are. That's what they call a head and shoulders formation there. One shoulder, head, lower shoulder. That's not good. Down it goes. Oh, in fact, it looks like Ben's Creek now. There's right there, that picture there. And it's come down here. But now you see, now look at this. Now, the first time it's ever touched 200 moving average, right? It's come back off. That's a good sign. If it can get back above that now, but that previous high, that's a good sign. And you know it's in the right direction. Rather than buying here and it go down further, because it could do, it could go further. So why not wait for the uptrend, not just, take a punt on the downtrend. Anyway, Ben's Creek. Anything else? Anything else you looked at? Alien metals.
No,
looking for metals.
No, I haven't really looked at any of the most read.
Okay. What are you looking at?
Neometals.
What are they about? I never heard of them.
It's battery metal recycling, and they've basically got a process which improves recovery rates from lithium batteries, and at a higher purity as well, something called lithium fluoride, which is actually one of the sort of higher priced lithium derivatives. So it makes it a good ingredient for battery metals. I mean, I'm looking at this with it's a speculative one. This is a sort of tech play. Revenues are quite some way away, really. But this is big stuff. European Union regulations dictate that very high amounts of battery metals need to be recovered. This will only expand as the EV fleet it expands as well. So there is an opportunity here. And basically what Neometals is doing is sort of, it's got some good technology. It's built some good partnerships, particularly with this plant builder in Germany. Got some potentially, big partnerships for these recycling hubs coming through, one with Mercedes-Benz. So yeah, early days really in the commercial rollout, but ones to keep an eye on.
Okay, cool. Tesco, we talked about that actually. Tesco, yeah, we're not profiteering from prices going up at all.
Well, they said
how are your profits going up then? And now you're putting your petrol prices up again. It's like they do literally, come down like lead, don't they? And go up like what's the word? Petrol prices. They're quick to put them up, very slow to put them down. And
I thought the Transport Secretary had some kind of dashboard whereby he was keeping an eye on retailers and whether they were passing oil price rises and falls on the consumer. Yeah, of course.
With the government, this how long are you Transport Secretary for? A month? And then you move on to something else then.
Oh yeah, no, he's Defence Secretary now, isn't he?
Yeah, so I talked to a Zinc Media actually. In fact, it's worth looking at because they are. I mean, I'll click in there. I'll put some results in the podcast. But they did revenue for the first half of the year. They are 20 million market cap. So revenue of 18 million, 60% year, but 12% organic because they acquired this edge. They do, factual TV documentaries, at war with Putin and all that stuff. He did for BBC iPlayer. So quite well-known documentaries, doing quite well actually. And they said H2 is largely the stronger half. So this half was very good. They got cash of 5.8. But I'm not really aware of that. But if you
how have the shares done? I haven't looked at the share price.
I think they're bouncing around. Let's have a look here. It's a bit of a messy chart when I looked at it. But they've risen. You can see that there's lack of liquidity there. That's
it's very, very, very serious lack of liquidity.
Yeah, that's why it's a bit bitty. But you can see here they've formed a base. They've come off here. They've formed a base, but they rallied up. They need. I think it's larger. Do
you know what? That's really. So this bounce is sort of somewhat predictable. So that they've fallen off. That share price has weakened. Yeah. As other players across the sort of TV and film industry have weakened because of this Hollywood writer strike. But this what it does is it's been largely immune, you would think, to the Hollywood writers strike.
Yeah, I asked him that. I said, "Have you been affected by the writer's strike?" He said, "No, because we're not in drama."
Not in drama.
Fact, it's one of the big American TV companies are now flipped to factual a bit more because of the writer's strike. So he said we've benefited from that. So they actually benefit from that. But he said, they're looking for a strong H2. In fact, the chairman did say it's going to be their strongest financial year for years.
I can believe that.
That's nice to hear in this environment.
There's schedules to fill, and if the drama's dried up, then there's got to be something in there, and so they need to fit it with bargain-loving Brits in the Sun. Who would want to watch that?
Belluscura's had good news, haven't they? They've had a suggested takeover bid. They're raising money. What's happened to the chart on Belluscura? I mean, Paul's done an interview in there. So look at that.
They're basically they're doing a reverse takeover of a company called TMT Acquisitions, an all-share takeover. That basically unlocked some cash in exchange for shares. So, a little bit of dilution there, but there'd be dilution if you had to raise money through a placing. Anyway, there's a small placing as well and some convertible loan notes. So they've raised about 8 million quid. And they think that takes them through to profitability by the end of Q2 next year. So, big market for this stuff. Some big orders in the bag and some big ones expected to come through. And lots of people around the world smoking too many fags and getting chronic obstructive pulmonary disease.
Yes. Let's see the fag market. Listen, so here's chart Directa Plus, and that's in a downtrend. Are they turning the corner here fundamentally? Because like I say, if they are doing it fundamentally, the chart isn't going up yet. Because sellers beget sellers. That's why you can have charts going down for a long time, and buyers beget buyers. If the share price is rising, you track buyers. If it's selling, you track sellers. So you can get this vicious loop. And when do the sellers dry up? That's when you want to know. When they normally when a company punches out some decent fundamental news, and it'll kill the sellers.
Yeah,
and it'll encourage the buyers.
I had a really nice chat with the chief exec and chief financial officer to really talk through, what they're doing, and this is so the chief exec, Giulio Cesario, he founded this company. Ever since the beginning has been focused on how you take graphene from what was a sort of, first of all, a hypothetical product to something that was then formalized in a lab, formularized in a laboratory, Manchester,
exactly. Britain again. Like, see, Britain invented the British.
Well, I'm not sure the people that actually invented it.
They weren't British.
They happened to be in Manchester.
Yeah, but that says something. Did that say something though? That says we're providing the infrastructure and the studies and the equipment to enable people to do this.
Indeed, British universities are fantastic. They're world leading, and British life sciences companies are world leading. British technology, is world leading.
British sausage roll makers, pasty makers.
If sausage rolls are your thing, we are world leading. No, but anyway, so Directa Plus have had their own commercial applications for a long time. Basically, financially, they've got to be financially disciplined. There's so many things you could do with it, but they've got some really interesting deals going on in sort of garments. So they're working with to make, say, bulletproof vests, for example. They do environmental remediation, so cleanups, oil spill cleanups. They work in sort of steel production to clean the waste material, and they've got some really massive opportunities in defence. They've got General Wesley Clark is on the board as a non-exec director. That's serious. General Wesley Clark is, a seriously respected military man in the US. So I think he headed up the operations in Kosovo and the Balkans. Yeah. They've got some heavy hitters on there and some really experienced guys. I think it's a company worth keeping an eye on. Caught up in the sell-off like everything else, and obviously the commercial transformation is really happening now, but yeah, definitely have a listen. It's worth listening to what they say. Impressive company. All right.
A couple of comments here. Justin, you and I both bought into Saietta when falling. No, I bought it when it started in the uptrend. I'll show you in the chart now. When it jumped, you got out, because it broke the downtrend again. I'll show you exactly in the chart right now. And also, you said, didn't you buy Destiny at downtrend? Quality often re-rates very quickly. Yes, but I sat on it for a long time underwater, and I'll show you the two charts right now. Where I did get in. I timed Saietta perfectly. I didn't time Destiny Pharma perfectly. I'll show you.
So it's timing. It is timing.
No, but Destiny Pharma,
it's timing as well.
Yes, in conjunction with fundamentals, Johnny. Not just timing. If I'm just looking at companies, I just thought Destiny Pharma. I thought fundamentally for a company that has 2 stage 3 assets with large end markets, a deal on one, they have cash, and they were like 25 million market cap. They were cheap, so I jumped in. Do you know what happened? They literally went down to side. This is where I jumped in right here after placing was, and they went down. Now, what I could have done is just wait until it broke this 15 moving average and the previous high going into about here. I wouldn't have sat on a bit of loss for months and just got up to here. Saietta, for example, I'll show you again. This was down again. They were at this point. They were literally sitting on market cap equals cash, and I thought they had lots of potential. And they were like, I think they were like something 15 million market caps and that. And it broke up 15 moving average, previous high. It ran up here, and literally it broke back down. Then, and look at that; it's broken down that support level where the gap was, and it's now down there. But look at where it's gone now as a result. So but I thought they were overvalued. But I thought they may need sort of further funding, so I didn't really hang around there. But that was more of a trade than a fundamental investment. There we are. But I mean, I still own all my Destiny Pharma because I still think they're undervalued compared to where they're going to be in 6 months, 12 months time. Anyway, anything else, Johnny? Any other people? In fact, there's anyone else arguing?
No more arguing.
Okay.
Yeah, we did have a look at Tesco today because they were spectacularly good results.
117 Hudson. John is right. Ha 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 ha. What on what? What is John? John's right on some things. I'm right on some things, actually.
Generally. Yeah. Anyway, Tesco results are fantastic. They were up a few percent today. Big is not always boring. They seem to have done it by taking share and cutting price. Sorry, my dog here is going mental. And cutting prices, which is holding their own against the discounters. So it's impressive stuff there. Yeah. What else?
Well, I'll give you examples of it's quite a messy chart, Tesco, isn't it? It's literally, but look at that. Bloody hell. What the hell?
Steadily going the right way though. Again, after it had a catastrophe, didn't it? In just after the exit of I can't remember his name there.
It was
I can't remember his name.
Terry, no, Terry or Terry something.
Yeah, Terry.
Or John Smith. John, no, I don't know his name.
No, I can't remember his name.
Smith. Yeah. Anyway.
But yes, anyway, really interesting fight back there going on at Tesco. I like the look of it. WANdisco took them fight backs.
Oh, hilarious.
My names have been changed to protect the innocent.
Yeah, that's kind of that. It's just WANdisco. I mean, it'll get to a certain stage where people forget it was WANdisco.
That does happen.
It does happen, yeah. And then this is good. But in about 6 months' time, I just found a good company. It's called Saietta.
Yeah, it will happen. It's no accident that these things.
Very good.
And it makes sense because it's a tainted brand.
Oh, look at that! Look at the picture of moving average there. I've never seen that before. But yeah, crazy. That's.
I often stumble across companies and I think I don't know who the hell they are, and I realise that I do from many years ago.
Yeah, you have to scroll back. I literally on Vox have to scroll back a year and a half, 2 years, and he said, "Oh, they would change their name."
Yeah, definitely.
Then why do they do that? A rebrand.
Definitely something to keep an eye on. Definitely something to keep an eye on. Seen it many times.
Okay. There was one more thing, just quickly on some of the business news. Tesco's, yes, lowering prices. HS2 scrapped. Wow, big surprise there. Fuel retailers deny profiteering. Yeah, do you know what? I don't trust the supermarkets anymore. I thought they always give this image that we're there for you, bringing down prices for you. If you look at them, their profits are going up.
They're in the business of making profits. That's what they exist for. They exist for shareholders to make profits.
But don't pretend you're not. What do you say to people? Do you know what? We don't really care about customers. We care about profit. But
then they won't make any money for their shareholders.
No, but then you'll say, but the way we make profit is we produce the best quality food at the best prices, and you can't beat us, and that's the market. That's how the market works. It's like Greg's. You can't beat. There's no one out there who'll beat Greg's for a fresh sausage roll. There's not, and try and beat that anywhere else, and that's why they consistently do well.
Yes.
Anyway.
Yeah. You've battered me into submission.
I do fancy sausage roll now, actually. Right. Thank you, everyone. If you commented, hit that like, subscribe button if you could, and share. And what day is it tomorrow? It feels like it's Friday, isn't it?
Thursday.
Oh, so we are back tomorrow. And we're back tomorrow at 12 o'clock. Please share that. Thanks very much. Speak it tomorrow. Blah, 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 blah. Where's the end stream button? There it is.